Good morning, everyone, and thank you very much for joining us for today's event to launch the second edition of the City of London Corporation's report, Our Global Offer to Business. I'm Catherine McGuinness, the Policy Chair at the City of London Corporation. And before I start, I'd also like to thank our excellent panel of speakers and our Chair, Axel Threlfall, the Editor-at-Large at Reuters, for taking part in today's discussion. I'll remind everyone that today's event is being recorded and will be shared on our digital platforms in the coming days. Please post any questions that you may have in the Q&A box and we'll answer as many of them as possible. And if you have any technical issues, please put your query in the chat box and the technical team will try to assist you. So questions in Q&A, technical issues in chat. And we also encourage you to share your thoughts on social media using the hashtag UK Competitiveness. And finally, you're all going to receive a link to the report after today's event, which we're aiming to wrap up at around 10:15. But before I hand over to colleagues to detail the report's findings, I just want to outline why I think this report is important and give a sense of the short-term strengths and the longer-term challenges which it indicates. Here at the City Corporation, we regularly engage with key stakeholders across business and government to listen to their concerns, promote the sector's interests and offer, and look at how barriers for the UK's financial professional services can be reduced. And we recognise, of course, that recent events have prompted unparalleled complexity, challenge and change. And what this report does is it enables us to evidence those changes, investigate them and understand what steps we ought to take to build on London and the UK's global competitive offer. The report demonstrates that the UK continues to be holistically strong in this space. We retain an innovative ecosystem that enables businesses to thrive. We offer financial services which have a global reach. We are a global gateway to capital. And we remain a desirable destination for financial and professional services with favourable regulatory conditions. That's all built on a strong foundation of strengths such as the rule of law, a long history as a trading centre, and features such as our time zone and our widely used language. Foundations which have helped to build a resourceful and resilient financial centre, which is truly unique. While we remain competitive, though, as this report will indicate, this is absolutely not a moment to be complacent. Work is needed to build on our strengths and make sure that we're fit to meet the long-term challenges ahead of us. In order to retain our competitive edge, we need to acknowledge our deficits, absorb lessons from others, and act to safeguard our future. For one example, our digital infrastructure needs overhauling. The UK's average broadband speed is the slowest of all global financial centres. Unless we change, we risk having analogue infrastructure for the digital age. But that's not our only challenge. The report highlights further room for improvement, such as developing an immigration system that encourages the brightest and best to work here, and creating a tax regime that incentivises investment. In drawing attention to the UK's challenges in this report, the City Corporation is reflecting the concerns of our stakeholders. But more than that, we hope we're providing an evidence base which will help to tackle those challenges with partners such as the government in a constructive rather than critical manner. Digital connectivity, for example, lies at the heart of the government's levelling up agenda, and so should be a natural point of collaboration. Together, government, business and sector representatives such as the City Corporation can, we hope, use this report to take steps that the UK to ensure that the UK remains a preferred destination for the financial and professional services sector. So enough from me. Let me just thank you all again for joining us today and hand over to Max Bierbaum from the Corporation's Innovation and Growth team to tell us more about the report before we move into our panel session. Max, over to you.
Thank you, Catherine, and good morning, everyone. Economies across the world are responding and adapting to significant change. COVID-19 continues to challenge global markets and physical flows, to accelerate the pace of the digital transformation and to necessitate new ways of working. Climate change requires the support of global finance for global solutions. And despite continuing geopolitical shifts, we need global cooperation to effectively address these challenges. As the City Corporation, we spend a lot of time talking to businesses about how a London location helps them innovate and grow, ask new types of firms why they are coming to the UK, and talk to international individuals at different career stages about what London's offer is to them. Naturally, they are asking about how we in the UK are meeting these challenges, why they should come and set up a business here, why they should come and live here. And understandably, they are asking for evidence. They want us to prove it. So this is why last year we set out to do an annual benchmarking study, a study that is based on evidence and data and compares the UK's global offer to business with that of other major financial centers. This second edition of the study, which we are publishing today, once again gives us a snapshot of London and the UK's competitiveness. It shows us where the UK's offer is strong and tells us where the UK needs to learn from other centers and get better. And not just us. From the people we talk to policymakers in the UK and investors across the globe, everyone can use this collection of data and analysis to learn more about how London and the UK and other major financial centers in the US, Europe, and Asia are performing in this critical time. To access partners, clients, talent, and capital, connectivity is key. And as we demonstrate in our study, the UK continues to build on its historic strength as one of the most globally connected financial centers in the world. Let me share a few figures with you. The UK is the world's largest center for cross-border banking. 15.3% of the outstanding value of international bank lending in 2021 was owed to banks located in the UK. That's more than $5.4 trillion. London captures by far the largest share of global FX turnover, 43%. That is $3.6 trillion per day and more than the US, Singapore, Hong Kong, Japan, France, and Germany combined. And the UK is Europe's leading center for asset management, with more than $8.6 trillion under management, of which nearly half are managed on behalf of international clients. I could continue. All these numbers, these huge numbers, demonstrate the ability of firms in the UK to access global capital, liquidity, and funding. But you may ask, do the markets really need financial centers? Especially nowadays, where so much stuff is happening in clouds, where we can work from anywhere and do everything remotely, even this event today. Well, we are talking about exactly that with firms. And they say they still value and need the proximity they have in London, the dense ecosystem of expertise, the co-location of banking, insurance, asset management, accounting, legal services, consulting, and the access to talent. London remains the global city of choice, according to recent Boston Consulting Group research. Even during the pandemic, London topped culture rankings. And this is appealing. A massive 40% of workers in the city come from abroad, 15% from the European Economic Area, and another 25% from the rest of the world. So London is really a place where businesses can hire from a multitude of backgrounds and experience. But policymakers need to guarantee that the UK's attractiveness to international talent does not decline further. And London is also a place from where any part of the world is within reach. In times of working from home, the UK's time zone allows businesses to cover major markets to both east and west from a single location. And as the world is opening up, London's huge international airport capacity, larger than in any other financial center, enables you to get to your clients and partners quick, wherever they may be. We do need faster internet connections in the UK, though, and more investment in London and the UK's transport infrastructure. Because whatever advantage the UK may have today may not be an advantage anymore tomorrow. So we constantly need to review the health of our business environment and of our regulatory and legal system. The UK is still the world's preferred regulatory regime for financial services, according to an executive survey. 31% of executives name the UK, more than the US and Singapore. And London remains the top global seat for arbitration, with 54% of executives naming it as one of their organization's 5 most preferred seats, a rank shared with Singapore. In our report, we showcase that firms located in the UK benefit from a strong legal environment, transparency, and innovative regulators. After being the first market to introduce a regulatory sandbox and open banking, in 2020, the UK's Financial Conduct Authority created the world's first regulatory digital testing environment. This is helping innovators get to market quicker. And the FCA is connected with regulators around the globe, which supports firms to access other markets with their ideas and products. But as I said, the UK needs to ensure that its business environment remains healthy, that the cost of business remains low, and that the UK's new economic relationships with the rest of the world reflect that services trade is at the heart of the UK's economy. This is why across many initiatives and reviews, the UK Listings Review, the Khalifa Review of UK FinTech, the Future Regulatory Framework Review, the UK government is proposing measures to keep the country's financial services regulation coherent, agile, and internationally respected. And it is looking to include financial and professional services in free trade agreements, mutual recognition agreements, and regulatory cooperation to ensure continued market access. To future-proof the UK's offer, and to respond to some of the challenges I outlined earlier, innovation is key. And for an innovative ecosystem to work, it is crucial to get the fundamentals right. The UK does that. It brings together innovative minds, supportive policymakers, and the finance required for ideas to take off. Between 2016 and the first half of 2021, investors poured $136 billion into UK fintech. That is 9 times the amount of investment in France. The access to talent is one of the reasons why UK fintechs are so successful, as we are demonstrating in our report. The UK has a higher share of tech-relevant graduates than, for example, Singapore or Germany, and many of the UK's world-leading universities offer courses in financial technology. And the consumer base is open to using fintech too. Even before the pandemic, 71% of the UK's population had used 2 or more fintech services like budgeting, making payments, transferring money. And that share has only grown in the last 2 years. Digital skills in the population need to improve here and across the globe. And public institutions and businesses in the UK are joining forces to identify and address skills gaps. But tech is only one part of the UK's innovative ecosystem. One other big question is how finance can help fund the fight against climate change. London remains the only financial centre that tops both conventional and green financial centre rankings. And after COP26 last year secured strong commitments on net zero, UK financial and professional services are now offering their expertise. A high share of them is signed up to initiatives such as science-based targets, the principles for responsible investment, or the principles for responsible banking. And sustainable finance activity in the UK is picking up across asset classes, particularly in equity markets. So, global connectivity, a supportive business environment, innovation. These are just some elements of the UK's global offer to business. And you will find these and many more data points and comparisons in our report, which you can access on our Global City website, theglobalcity.uk. Using 95 metrics and 5 competitiveness dimensions, that is innovation, financial reach, infrastructure, people, and business environment, we are measuring London and the UK's competitive position as a finance and business centre. We evidence the UK's strengths and highlight areas for improvement. Overall, London and the UK come out ahead. Not because we come top in every dimension, we don't. We lead in innovation and come second in financial reach and infrastructure. And we can see that all centres have strengthened their offer since our first study 1 year ago. But what is critical and special about London and the UK is the depth and breadth of its offer. Having that connectivity, resilience, talent, access to capital, and ability to innovate all in one place. Our report gives evidence to inform decisions on where to do business, where to locate, and makes a compelling case for London and the UK. And we hope to spark a conversation about what the UK needs to do to maintain this offer well into the future. Thank you. And we hope to see you here in the UK very soon. Back to you, Catherine.
Thank you very much, Max. Thank you very much for that interesting introduction to the report. And I'm now very pleased to hand over to Axel for our panel discussion. Axel.
Thank you very much indeed, Catherine. I'm thrilled to be involved in this discussion, importantly on the competitive strengths, not just of London, but of the UK more broadly. And I know we're going to get into that as well. We've heard the headlines from Max there, so I don't want to take too much more time away from our panel. Suffice to say that there is plenty to cheer about in the report, but it does, of course, highlight areas that might cause some concern, and it's my job over the next hour to make sure those bits aren't brushed under the carpet. I'm sure they won't be, but that is certainly one of my tasks today. In preparation for this, I've got to say the media is refreshingly balanced, full of both the good and the bad, depending, of course, on what you read. Lloyd's of London considering packing up its iconic HQ on one page, Google planning a huge investment into London office space on the opposite page. Talk of London as an obsolete finance hub, void of bankers on one side, and then reports of entrepreneurs flocking to a city that tops a list they're most likely to succeed in on the other page. So very balanced. Our speakers, of course, are well placed to provide some clarity on all of this. So let me introduce them now. And I'd like to remind you, do send your questions in for the panelists, for the speakers as we go through, and I'll do my best to weave those in as we go. To the panel, Catherine McGuinness, who we've just heard from, of course, Policy Chair of the City of London Corporation. She is joined by Janine Hurt, CEO of Innovate Finance, Alex Young, Chief Economic Advisor at the London Property Alliance, and David Craig, Co-Chair at the Taskforce on Nature-Related Financial Disclosures, and the former CEO at Refinitiv. Welcome to all of you. Catherine, I know we've heard a bit from you already, but let me start with you. And this, I guess this is sort of opening gambit as a chance for all of you to lay out your thoughts more broadly, quickly. You talked about the importance of acknowledging our deficits. Are we acknowledging our deficits quickly enough and efficiently enough in your mind?
Well, I think we really do need to show that over the next year. Actually, I think that we've heard the reviews, heard from Max about some of the reviews that's been carried out. We are seeing action on those, but I think we need to see pace in the way that we build on those. Whether it's the Khalifa review and seeing the establishment of the Centre for Innovation, for Finance, Innovation and Technology, whether it's looking at what further we ought to do on access to finance, and what it is that we need to do on our immigration system to make sure that we can continue to attract global talent while, of course, developing local needs. So I think I think we really need to work over the next year to make sure that we're maintaining our strengths, but at the same time building on those areas of deficit. And that will mean investment, and it will mean investment across the UK, but investment in London too, because the levelling up agenda needs to be levelling up and not taking London down, particularly at a time when we see so many other financial centres strengthening their offer. Just one thing quickly further, Axel. We are very committed here in the City Corporation to make sure people really want to come back into this square mile and really want to be here. Everything that we hear tells us that people do actually want to carry on coming into central office space, although they'll use them in a different way. We already have a great and exciting offer when we're up and running, and we're making sure we're building on that so that it's not just sitting at your desk. There's something to do when you go out at lunchtime or in the evening to meet your friends.
And you know, we'll come on to that, and I know Alex has got plenty to say on London as a physical hub as well. Very quickly though, Catherine, just to follow up, you've talked. In fact, I read it earlier this month. About having to get on the front foot in global finance, make the most of our new situation. The government says it's making headway. You clearly feel we need more from the government. How quickly are you telling them we need this to happen and we need to see them act?
So I think this year is a really critical year, actually. I mean, I do think they are making headway. I think that the vision that the Chancellor set out for the financial professional services sector last in his Mansion House speech last year. We're beginning to see that acted on, but we do need to see more. And I would suggest we particularly need to see more this year when the UK retains the presidency of COP. We need to see some delivery on some of the financial sector promises that were made there. And the UK, I think, should be at the forefront of that, because this is another area of strength of ours, which is important not just for us, but actually for our place as a global financial centre, helping to meet global financial and other challenges.
Yeah, and plenty more on that, by the way, on COP and climate and nature related issues from David in just a moment as well. Thanks very much indeed, Catherine. Janine, let me come on to you next. Investment for innovation is clearly coming in. We're seeing that. Well, I think it's 11.6 billion US invested into UK fintech last year. And it's not just London. It's, as I said at the top, it's across the board. What's behind that momentum? But probably more importantly, do you reckon we can keep that momentum up?
Yes, I absolutely do. And Axel, it's a great question, because I think, to your point, we have seen 11.6 billion coming into the UK ecosystem. I want to emphasize that means we are second in the world in terms of investment into fintech, behind only the United States. We're actually ahead of our next 6 European counterparts behind us. So we very much have a leadership position right now. And I think there's a few different reasons for that. So Max mentioned a number of them at the opening speech, but in terms of the regulator being very proactive, in terms of the phenomenal talent that we have here in the skills, looking at the positioning of London and the wider UK, the impressive piece is that we're seeing a huge growth, not only in London, which has seen more than 210% increase year on year, but we're also seeing a 230% increase in regions outside of London in terms of investment. So it's very much a UK picture. But I also want to echo what Catherine mentioned, is that we cannot rest on our laurels to maintain this position as a leader in innovation. So we are, and have historically always been, the technology center. We've been a leader in innovation. We've been a leader in financial services, and fintech is the culmination of that. And for good reason. We've had fantastic support from the government, from the regulators, but it is a critical year and we cannot rest on our laurels. We have to continue to keep moving forward, continue to make sure that we create an environment where entrepreneurs want to come here to grow, to scale, and to list as well.
I talked at the top, Janine, about London topping a list that entrepreneurs are most likely to succeed in, which certainly must be applauded. But as we heard from Max, this issue of attracting international talent, we don't rate so well on that front. Those two bits don't really sit side by side for me. What's the picture from where you are?
Well, I think we are very pleased that the Chancellor announced last year the scale-up visa will be coming into play in March of this year, because we do believe that that is an absolutely critical component to making sure that we can continue to attract talent from around the world. And that is increasingly from Europe, but also from Americas, from Asia, and everywhere across the globe. So making sure that we have that continuation of diversity of thought is very critical to see entrepreneurs wanting to come here and set up and continue that great success that so many entrepreneurs have found as well. I mean,
innovation on one is one thing, but I guess my question is, are we innovative enough in how we pitch the UK and London to the rest of the world?
So that is a really good question, Axel. And I do think there is an area that we can potentially improve on in terms of talking about our strengths here in the UK. So we are notoriously tend to be a bit more modest about our strengths and look at the areas that we have to improve. But in reality, there is a reason that so much investment is coming into fintech. And there's a reason that so many great innovators choose the UK as their home. So making sure that we are talking about that, making sure that we are promoting the UK across the world is very critical for next steps. And we at Innovate Finance have been speaking with different stakeholders across government and across the ecosystem more broadly about how we can do that. I would say I think the government is doing a very strong job in terms of talking about the benefits of setting up here as an innovator. And we also need to be doing that and championing that as industry.
Very good. Janine, thank you. And by the way, I saw the question come in on the Khalifa review that Catherine mentioned and digital currencies, and that is an issue we're going to come on to. So to the person who wrote that question through, yes, we will get on to that shortly. I know Janine has something to say about it, as does David. To you next. The Global Cities Survey for last year referred to London's recovery as precarious. It referred to progress but lagging competitors. What makes the situation in London more precarious than the other centres right now, would you say, Alex?
Well, good morning, Axel. Good morning, everybody. As you mentioned, the survey, which was commissioned by the London Property Alliance, which brings together City Property Association, Westminster Property Association, and was undertaken with our friends at Centre for London, was really an attempt to take stock of how London can be seen to be performing against a range of international competitors. I mean, a lot of the narrative and discussion that we've been sort of dealing with since Brexit and since the last election has been around London's position in relation to other cities in the UK. It's a narrative and a policy area that we'll all be very familiar with. Less so, arguably, has been the focus on the fact that London objectively competes internationally in the way we've been hearing, for capital, for talent, for investment, for visitors even, you know, and so forth. And so the survey was really designed to look at a couple of dozen metrics which could try and tease out how London is actually competing against the likes of Paris, Berlin, New York and Hong Kong on that global stage, particularly, excuse me, as we hopefully come out of the pandemic and move into a period of recovery. So that's a little bit of background. And in terms of how we're getting on, I mean, the survey results are interesting, I would argue, because in fact, out of those 5 cities, London is kind of in a middling zone. So Hong Kong, interestingly, is arguably performing quite strongly on a number of measures around how its economy and employment figures are faring, and also its retail and hospitality sector, and indeed measures of demand around transport. Now, that's not to say there aren't real challenges in Hong Kong, some of which are to do with its long-term political and economic future. And in certain areas, such as in the case of aviation, they've seen, because of their zero COVID policy, a virtual collapse in passengers coming into the country in the airports. It's down by 95, 96% or more. So, but Hong Kong remains an important centre and potentially, in the short term anyway, in a very strong position. And then at the other end of the spectrum, we see in New York, which in many ways is a more comparable city to London because of its system of government, its economic structure, its demographic profile, and of course, because it's a major, if not the major, sorry, Catherine, global financial centre. We see New York really struggling. We see New York's performance in terms of unemployment levels, in terms of office vacancy rates, struggling on retail and hospitality, and indeed indicators of public transport use. And, you know, perhaps predictably for Britain, for London to a certain extent, although not entirely, London sits somewhere in the middle on a number of those indicators. And I think for me, the big challenge for the city and indeed London as a whole is to try and forge together a set of broader policies which kind of step over and navigate through this very complex politically charged territory around London being allowed to succeed in the context of, you know, some of the polling we've seen in the last week, remarkable poll this week, which showed that there's a majority of people in the country who believe that London, they're comfortable with the idea that London could be made less well off if that addressed economic disparities across the country.
And you, sorry, yeah, and just to interrupt, Alex, sure. On that point, I saw a piece that you wrote earlier this month. You know, I would say, you know, the tone was more pessimistic, but you talked about an antipathy towards London from central government. If indeed that is what we're getting, we've got a problem, no?
Well, yeah, it's a problem which isn't entirely new. I mean, historically, London has been through periods of time where maybe not in the same way in terms of how it's been politically positioned, but London has always kind of troubled policymakers, or let me put it this way, economic inequality in Britain has always troubled government. I mean, the Jarrow March is, perhaps the best example of that, and that was a very long time ago. And in the 1960s, we saw attempts to relocate economic activity out of central London, industrial development certificates and so forth. So it's not a new problem in that sense. I think the big challenge is to try and articulate the extent to which London does two things. One is, and in a way which doesn't come over as patronizing, which is the terrible risk with this stuff. But it's a well-worn or well-quoted, often quoted statistic. But London provides this big fiscal surplus for the rest of the country. It's around £40 billion, which is then spent on vital public services elsewhere. And in fact, the CAS, this tiny, tiny part of central London, of which the city is in turn a part, is responsible for about 11% of total UK output, and the city itself is around 3 to 4% of that. So there's an argument about trying to get people to at least accept the facts on the one hand. And then the other point I just finish on for now is to say that, London is this gateway for investment to the UK. I mean, it's a literal gateway in the case of international visitors. So we want people to try and understand and together to build a consensus that what's good for London is good for the rest of the country because of this competing on the international stage point.
Yeah, good. Very good. Alex, thank you very much. And yes, we will come back to some of those bits. David, let me finish up with you as a sort of to set out your opening thoughts here. And we'll come over to the sustainable finance and innovation bit in a minute. But from your many years at the helm of Refinitiv and the insight you gained onto what makes London attractive, successful, thriving, etc., we heard Max talk about connectivity is key. And there are, of course, lots of pieces to that connectivity bit: digital, physical, language. Where are we doing well, David, and not so well, would you say?
Well, good morning, Axel, and thank you for inviting me to participate on this great panel this morning. And congratulations, Catherine and Max, on a great report that not only, I think, uses data to point out the strengths, but also very clearly points out areas to work on. And the first thing I would say, and just from my own experience over the years, is the markets are changing really quickly. And I think what's great about the report is what matters is changing. Sustainability, we've talked about digitization, digital currencies, new tech, new ways of working, the importance of inclusion and diversity in our industry, new shifts in economic capital power, even monetary policy. The world is changing quite quickly. And I think what the survey is starting to do is very quickly adapt to the new things that matter. And it will need to continue to adapt, because what matters for the success of a financial center 3 years ago is very different now and will be very different in the future. So I think it's great that we're forward looking on this. As Catherine said, I think a lot of work is needed. I mean, I hope my broadband holds together for this call as we all work from home. And whilst the report does point out the problem with broadband, and in particular in the new world where not everyone is commuting into London every day, and actually you might want to work in other parts of the country, it's incredibly important that this problem is addressed. And we can't just continue to succeed with rates that are half that of other financial centers. But the other thing I'll talk about in terms of digital connectivity is actually our access and connectivity to the rest of the world. It is no accident that the world's leading financial centers are all by the sea or by the major sea inlets. And why is that? Is it because of historical trade ties? Well, actually, in the modern day, it's because our submarine cables connect these centers, and low latency, high capacity is incredibly important for all financial centers and digital trade and for many other reasons. There are 7 cables connecting the UK with the US. There's another 1,000 terabits per second coming online. So great news in terms of connecting us with the United States. London is very well served. There's only a fraction of that going into Asia. And I've been talking for a while about the fact that we have 3 cables traveling down the Suez Canal that connect us to the rest of Asia. We need to make sure that we're looking at connectivity, not just in terms of broadband and 5G, but international connectivity. And I think the government needs to play a role like the US government does in reviewing that. The panel has spoken about lifestyle, why culturally London and the UK is such a great place to come. It's worrying though that yes, 40%, I think Max said, of London is international, but the survey points out there's been the largest drop in the last couple of years. How do we ensure that UK and London is a great place for international talent to come, to thrive, to work, to succeed? As someone who ran a business for many years, the best thing about the UK was just the sheer access to great talent and innovative and diverse talent as well. And I think in this post-Brexit world, the opportunity to create different types of immigration and visas, as we're doing with my other hat as I chair the India UK group, we are looking at visas with India, as we are with many other countries, to really sort of think about strategically what's the talent that we need to succeed and what opportunities are we creating for people. I think it's really important that we continue to do that. So I think there's some real strengths in the report. The other thing that I will point out too is that London and the UK is a centre for raising capital. Whilst the report is based on 2020, the really good news is 2021 was a fantastic year for capital raising. The rest of the world saw a big increase in IPOs. There was a 7-fold increase in IPOs on the London Stock Exchange, raising more, I think, than Amsterdam and Frankfurt combined, the largest year since 2007, with a lot of tech IPOs and consumer IPOs as well. And I think the new rules from the FCA on the dual class structures, the free float, the new SPAC rule changes are all extremely welcome to do that. There is still work to do, though. For example, there are only 30 Indian companies that list in London. There are constraints around that. There are constraints around CREST and the settlement system that we have to look at. So I think there is something to really cheer about there, but also some work to do to make sure that on the technology and support infrastructure, we remain a leading centre that is providing really low friction for listings and foreign listings and those as well. So, but I'll talk about sustainable finance later. I think we're going to come on to that, which I think is, one of the areas that I think is going to determine a leading financial centre is really the leadership in sustainable finance. And that's where I think the UK and London has a clear opportunity to succeed.
Yeah, okay, good. Thank you, David. Julian, let me just bring you in on the capital raising bit. I mean, yes, the numbers do look good. So far this year compared to last year as well. We're seeing tech companies, I believe, attracting large volumes of capital across all the different stages of the funding journey. Are you seeing anything new right now? Is there a catalyst for a new impetus, or is this just more of the same?
Well, I would probably reflect on David's comments, because I very much agree that the decision by the FCA to move forward with a number of the recommendations that came out of both the Hill Review and the Khalifa Review has been incredibly critical, and I believe will continue to be very critical for scale-ups that choose to list here in the UK. I think what we are trying to focus on going forward is making sure that we have institutional investment into innovation and fintech. I'm speaking more specifically about, so looking at how we can adjust that, but also trying to drive up the domestic investment into fintech. And I know there was one of the comments at the top around diversity, which I'm happy to speak about in a moment as well. But we do see that more than 50% of that 11.6 billion has come from international investors, which on one side is a real positive, but on the other side, there's a real opportunity here for us to drive the domestic investment into fintech innovation as well.
Yeah, okay, well, look, let's get straight onto that, the diversity issue. Because it's my understanding you don't feel we're doing as well as we should be doing on that front. A question comes through: why do black tech entrepreneurs in the UK say they have to rely on foreign investors to get their business off the ground? There's a piece out highlighting very low levels of VC funding going to organizations with black founders. What's your perspective on this?
So I think this is something that we need to be doing better on here in the UK, but I also would add we need to be doing better on it on a global basis in terms of diversity. So in terms of that 11.6 billion US dollars that I spoke about earlier, we know that only 9% of that went to female-led companies, so female CEOs or female founders. A lower proportion of that went to other underrepresented founders as well. So this is really disappointing, because we also have data that shows us that, for example, female CEO-led fintechs had actually a stronger runway and were more resilient during the pandemic than male-led fintechs. So I think we just need to be raising awareness about the opportunities and driving that investment into companies that have underrepresented founders. But I think this is a UK issue. I also think, however, it is a global issue as well. So the more that we can come together, and I emphasize bringing industry together with government and with regulators to look at how we can solve this problem is very key.
I guess the question has to be, though, Janine, are we doing that? I mean, that's yes, clearly that's what we need to be doing. That's the prescription. But are we doing it? Clearly not enough is being done. And
we need to do more. And I can speak, of course, from Innovate Finance's perspective. We have a very strong Women in FinTech program. We have a Women in FinTech Powerless, Women in FinTech Power Hours. We are broadening that out to look at wider diversity, to look at ethnic diversity, national diversity, socioeconomic diversity is also very, very key, and diversity of thought more generally. So it is something that we are adamant to try and improve. I do think that we're seeing more and more voices across industry also talking about what has to be done, but it's going to be a long journey ahead of us as well. The other piece I would just point out, which I think is critical in terms of shifting the mindset around investing into underrepresented founders, is to make sure that we have the senior executives at some of these investment firms, so the VCs, et cetera, are representing the broader base of who they're investing into. So that is something that we're looking at as well and trying to advocate for.
Okay, very good. I want to get, you mentioned Khalifa. I want to get to this, the point that Catherine made as well. She mentioned the Khalifa review and this question on central bank digital currencies. David, maybe I could start with you on this. The question is, recent reports of the House of Lords Economic Affairs Committee negative about CBDCs. Is this an example of lawmakers and policymakers lagging industry? Could it be symptomatic of a trend that risks UK reputation for innovation? It's a great question, because David, how quickly are we moving ahead on this? Reuters had a piece, I think it was yesterday, on the way the Fed is dealing with this, pushing it to Congress, saying Congress needs to decide on this issue. It's clearly years away in the US as well, right?
Well, I think many people in the industry were disappointed with the report. It's fair to say that. I think the opportunity for central bank-backed digital currencies was not acknowledged. I think a lot of the downside and risks were acknowledged, but the opportunity to streamline international payments, to improve protection from fraud and money laundering, to basically take a lot of friction out of the system. Many other countries around the world, particularly in Asia, I think China is the furthest ahead, but other countries, Singapore and others, are doing some really real tangible things in cross-border payments on central bank-backed digital currencies. And I think the danger is that we lag behind in this space. I don't think the US is always necessarily the benchmark. We shouldn't just look there. We should be looking east. We should be looking at parts of Eastern Europe. We should be looking at parts of Asia and seeing what they're doing, and also learning from it. The truth of the matter is the frictional cost of money transfers is still too high. And if the UK is going to remain a center for where money comes in and goes out of, we're the world's leading center of foreign exchange, as Max pointed out, we have to solve the frictional cost of money transfer. And the central bank digital currency is a way of doing that. So I just encourage the Bank of England to continue to investigate this and to trial and experiment and continue to leading in the way that it is, so that we can demonstrate that leadership on something which I think is the future. If I predict one thing in the next 10 years, central bank digital currencies will be real. They won't be just something that we talk about.
Janine, very quickly get your views on this. I know this is something you're against, generally speaking, I believe.
Well, I think in terms of CBDCs, obviously looking at the report that came out from the House of Lords, was it 2 weeks ago now, we were slightly disappointed just to see the recommendations. But I think it's important to talk about the fact that that report looked very specifically on retail, whereas there is a conversation to be had around wholesale. And I also think it's important that these questions are raised, because as an industry, we recognize we need to do potentially a better job of talking about the benefits of CBDCs more broadly towards the end consumer. And that's something that we need to take on board. I think there is a real opportunity here for the UK in terms of international competitiveness to lead on this front. So we don't want to squander that opportunity, but at the same time, we need to be sure that we are protecting the end consumer. So looking at these questions that are being raised are very important for us.
Okay, good. Janine, thank you. Catherine, I want to come back to this issue of getting physical bodies back into city centres. I know you're sitting in the city now. You said before we started this call, things are getting a little busier, and that is clearly heartening. How do you keep people coming back to places like the city, and do people want to live in the square mile? Do we have any evidence of that? What is the corporation's view on residential development?
Okay, let me start with that residential point. Of course, we're talking today about the global offer to business. But on the residential front, we have a number of residents in the city. They are an important part of the city's overall community. We have certain obligations under the London plan to add to our residential offer in the city itself, but we have no plans to go beyond that within the square mile because this is a business centre. So you won't be seeing us changing office space into residential. You will be seeing us meeting our obligations under the plan and looking at where we can add to the housing stock elsewhere. Actually, there's so much demand for business office space within the square mile itself that there wouldn't be a rationale for that. But our planning applications are continuing, and people are telling us they want to base their businesses here. We're also hearing a strong message from office workers that they actually are now in a position now in a place where they really want to come back. Maybe not for 5 days a week. We really think people are going to look at different ways of using the weekend and different ways of using their office space. But all the indications are that people are really keen now to get back into that different way of interacting with people that you get when you see them in the round. We were really disappointed before Christmas when Plan B came in. We'd seen figures really go up. We had about 73%, 80% of normal footfall, and it really felt as if the place was alive again. That went right plummeting down and is now coming increasingly back up again. I told you I had to queue for my coffee.
Yeah.
I mean, I see that as a positive sign.
Sure. Alex, get your view on this as well. Getting people back in. I talked at the top about you're seeing reports London becoming an obsolete financial centre void of bankers. If it doesn't need tens of thousands of bankers, clearly it's going to be emptier. What are your general thoughts on London and more broadly about this?
Well, I mean, it's a very, very interesting question, because before the pandemic hit, the received wisdom in government amongst policymakers based on academic evidence and indeed sort of value-based judgment around policy was that cities were good things. We should encourage their growth within acceptable limits, of course, spatially as well as otherwise, and height-wise, always an issue for this, well, maybe for Westminster more than the city. And that, economists talk about the agglomeration benefits of packing more people into small areas because of the access to deeper and wider labour markets that gives employers. So more types of accountant and more of them. To take an example, when Crossrail opens, it will bring another 1.5 million people within 45 minutes of the city. So that helps employers to access talent. Then there are the benefits to the employees in terms of what are called spillover benefits. So all the stuff that gets talked about, the happenstance, the meeting people, the informal connections, which actually then create opportunities. And that was the pre-pandemic understanding, which all political parties tended to embrace. Then we had a public health emergency in which people were told to stay at home. And then we've kind of had a view which in some ways could be characterized as, well, people have enjoyed working at home. They've benefited perhaps personally from doing this. So why don't we just let everybody do it?
Right.
And I think, sorry, go on.
No, I was agreeing with you. I guess important here is how, as we try and get people back into the city, into the city centres to work, to live, how does London compare with some of the other big financial centres around the world on this?
So, I mean, to answer that question, I think we have to come back to this issue of talent and this global war for talent, it's called, and recognizing that London is competing internationally. We know that one of the key drivers of attracting and retaining talent is providing people with great places to work, whether that's within their buildings or within the surroundings within those buildings are located. So we still know and believe that position holds true. So the question then comes, I think, is to what extent can the city and indeed other parts of central London maximize their ability to compete on that strength? Because, and yes, okay, there are changes in the trends in the workplace and so forth, but I think fundamentally we will see the market correcting, that people identify that they will be able to progress more and earn more and have more fulfilled lives in general terms if they are coming back into cities.
And do it very, very quickly, Alex. I've got to worry you on the time here. But we're talking about the city. What about Canary Wharf? Do we write off Canary Wharf?
No, I mean, I think even the city would acknowledge, given that we're now allowed to connect the city to Canary Wharf, with Crossrail wasn't the case with the Jubilee line, another story for another day. I think everybody recognises that these different parts of London are complementary to each other. They give people choices in terms of lifestyle, high-rise living, low-rise living, and all the rest of it. And Canary Wharf is in some ways a very different product to the city. And I think if we get the transport links right, we get safety, crime, quality of life issues right, then actually we're in a very, very strong position to compete with places like New York on the one hand and Hong Kong on the other.
Okay, good.
And
Thank you, Alex.
Axel,
Yeah, go ahead.
Just very quickly on that. First of all, I absolutely agree with Alex about Canary Wharf, but I think it's also true of some of the other partner cities in the rest of the UK. So I do think there is an offer from the whole UK which supports, what London has to offer. I mean, the great fintech expertise that we have around other areas. Scotland's got huge strengths there, as does Northern Ireland, as does Manchester. I mean, Janine could tell us more, but I think it's those relationships with other places which also help our competitive strength.
Janine, are we seeing London suffer as a result of the Manchesters, the Bristols, other really attractive places for entrepreneurs?
Not at all. And it's actually the opposite. So, I mean, we still know that around 90% of investment is going into the London area for fintech, but we've seen huge increase in terms of outside of London. And I think that's very important to emphasize because people want to be basing themselves in different parts. There are different benefits across the entirety of the UK. And there's also different centers of excellence across the entirety of the UK. So looking at specific areas which may be strong, say, on artificial intelligence or on cyber technology. So there really is a huge benefit to having this connectivity across the entire United Kingdom. And I think it's also a strength of the UK that you don't see elsewhere in different countries throughout the world.
Okay. David, I want to come on to the mainstreaming of green finance and this crossover between sustainability and tech. How is London doing generally, would you say? And Janine, I'd like to get your views on this as well. But how are financial centres and London in particular responding to this challenge of climate change?
Well, I'll just follow up on the discussion on location. It's funny, I was talking to a green tech company the other day, and I asked them this silly question, which is, where are you based? And of course, the answer you get back is, well, we've got someone in Bristol, someone in Manchester, someone in Surrey. I mean, I think the centre and the notion of location and base is now really important. And Janine's point, those travel links, they say that your impression of a city is given by when you land at the airport, how do you travel in? Well, the good news is 4 years late, you can now get on a train and go to my old office in Canary Wharf. That's going to be a sea change and make Canary Wharf and London a far more attractive place to work. So I just wanted to follow up on that transport link and the nature of it's not a sort of zero-sum game. I think the future of the UK is based on success of many cities and London being a hub for financial services. But on sustainable finance, I think the potential is enormous. It's clearly the biggest single change that the financial services industry is experiencing globally, possibly for 20, 30 years. London particularly, and the UK particularly after COP26, has a potential to lead, especially when you look at the enormous net zero commitments that are being made and figure out, well, where is that 200-300 billion of investment just in offsets alone? Where is that going to go and what's it going to need? But the truth is, at the moment, is we're not the only financial centre that's supporting this. So 70 billion of green bonds issued last year. That's 8% of the global total. So where are the other green bonds being issued? Well, it's Frankfurt, it's Singapore, it's Hong Kong, it's New York. So there's still, a race on, and we've got to focus and figure out where exactly we compete and how do we do it. Our FTSE 100 is still highly dependent on carbon-intensive industries. Right. Yeah. The good news is that our disclosure rates are very, very high. So we've got, of our FTSE 100, over 70% of our companies disclose Scope 1 and 2. The bad news is that the amount of carbon that they're emitting is also very high, 1.6 billion tons in 2020, which puts us way up above France and Germany and other parts of the world. So we do have a very carbon-intensive FTSE 100, but therein lies the opportunity for transition as well. I think, with my hat on too, the extraordinary thing about the future is that we have to look at climate and nature, of course, together. The truth is that the strongest and most effective way of absorbing carbon are natural based. In fact, the McKinsey report yesterday released on transition said that the NCS, the natural carbon solutions, are there today, they're implementable, they need to be part of the solution. So I think the exciting thing for us is how do we then get finance, technology, fintech, and green tech working together on these solutions. We got tremendous backing for our program through DEFRA and the UK government, with Treasury as well. We have a quarter of all of our members are from the UK on the TNFD. But there's a lot of work to do and a lot of innovation that's going to be required, not just in fintech, but in green tech, in other spaces as well. And we're not the only global center that is doing this, but we've got the potential and the expertise to really lead in this space.
And thank you, David. And Janine, sort of two-pronged question to you on this. What proportion of the companies you work with are prioritizing this stuff and really coming up with solutions to this, is the first bit. And second, as we compete with other centers, how important is this issue? We talk about a really carbon intensive FTSE 100. How important is the way that the government and the city and the way they're dealing with the green issue to these young companies deciding where they're going to be based?
Let me take the second question first, because I think it's absolutely critical. And I think to David's point, there's a real opportunity again here for the UK, because we are a leader in fintech, we're a leader in green and ESG. So bring those together. You can't really pull them apart, because fintech is going to be supporting our road to net zero and our journey to a more sustainable future, both for financial services, but actually for the economy and society more widely. So there's a huge opportunity here for the UK to continue to be the leader in that front. And I think it's really critical to the majority of entrepreneurs that we speak with, the majority of fintechs. This is core to their proposition. And we talk about fintech ultimately being so successful because they put the customer back at the center of the proposition when we think about B2C companies. Now, so many fintechs are also putting the environment at the center of the proposition as well. So there's huge solutions that can be made. There's a real opportunity here for the UK, but for the sector as a whole. And it is at the forefront of most of the entrepreneurs' minds that I'm speaking with as well. And we had a conference in the past, our FinTech for Good inaugural program. And I think there was just so much energy at that session, because we talked specifically about how FinTech can help us in this journey that we're all on together.
Do you think London is doing well generally, or the UK is doing well generally on this piece?
I do. I think, as always, we don't want to rest on our laurels, and there's more that can be done. But I think we already are very, very much a leader in this space. So building on that momentum is very, very key.
Sorry for jumping around so much. Again, we've only got a few minutes left, and there's some really good questions coming through. One thing we haven't really talked about, and I kind of wanted to stay away from it, but we can't, is Brexit, of course. And Catherine, you have made it very clear that relations with the EU need to be put on what you call a new footing. How are we doing with that? What is the general, very quickly, what is the general feeling now on the Brexit bit and what it's done to the city?
Well, in terms of the Brexit bit and what it's done to the city, as you put it, I mean, I think the city in a way has almost moved on from Brexit. People have found ways of doing their business. Yes, that's meant some businesses moved to other centres within the EU for EU-facing work, but the number of jobs that have moved have been less than we might have anticipated, and people are getting on, getting on with business basically, but are very keen to see the political overtones and the relationship with our EU friends and trading partners put on a new pragmatic footing. The political noise, of course, was very bad towards the end of last year. I'm hopeful that that is improving. We've seen some very pragmatic gestures, such as the extension of the temporary equivalence decision on central clearing from the EU, from my namesake, Commissioner McGuinness, which I really welcome that sort of step, and I think we need to see more movement in that direction to go forward. Look, we've got some really significant common challenges. The climate challenge being the biggest, probably, and recovery from COVID being another. What we really would like to see is this globally interconnected set of markets working together to meet those challenges, and supported by regulators and governments and so on, talking to each other.
I mean, of course, there are a lot of people who will say that the climate bit and the pandemic have temporarily masked the negatives and the dangers of Brexit, and it's going to come back and bite us. David, I know you were quite keen to stress when we talked before this meeting today, to talk about the broader positives of Brexit. Very quickly, what's your take?
I think what Catherine said is important. We need to move on. and think about how to redefine the opportunities, particularly around movement of talent. I talked about visas earlier. Connectivity is really important. And I do think this gives us an opportunity to be far more strategic about the talent that we want to welcome in, develop a more inclusive workforce with fantastic people from around the world and move through that. So I just think we need to move forward now and not look back at the problems of it, and think about how do we redefine ourselves as a digital center with connectivity around the world. Both digital movement and physical movement of people is incredibly important, and it gives us a chance to redefine that, as we're seeing with many of the trade deals and the work we're doing with India, with Asia, Switzerland and the other areas.
I'm going to finish with a couple of, well, quite a political question that came through on regulation. And Catherine, let me start with you. The report presented today notes the UK regulatory environment as a strength. Is the politicisation of regulators something we need to be concerned about, affecting the perception of stability of the UK regulatory system? It's a good question. It's a tough one, right?
Yeah, I mean, I think it's one of our strengths that we have strong, predictable, adaptable, a good regulatory framework and regulators who are implementing it, against the backdrop of international standards. I think as we set our own regulatory framework, and there's been a lot of consultation on what that should look like, and that's one of the areas we're looking forward to seeing a movement this year. It will be very interesting to see where the oversight, how the oversight is exercised. Now we're doing that ourselves, rather than working in concert with 27 other states. We've had various suggestions about how that oversight might be exercised. But I think what's really important is that we have strong, sensible, usable regulation that's made for market stability and other reasons, and to facilitate trade. So I suppose in a roundabout way, what I'm saying is that politicization, if it detracts from that, would be a bad thing. But we need to get the right oversight as we change our regulation.
And how distracted are we by domestic politics at the moment?
So I think on the regulatory development, I wouldn't think we were. I think we're distracted by domestic politics on all sorts of other fronts, but I see our regulators getting on with their work, and all the signs about the new framework are really very good. There's work to be done. I think we need to look at how we make regulation easier to navigate, how we make rules easier to find them, and of course we need to look at how we adapt to a changing world. But I think they do a pretty good job, to be honest.
Okay, look, 30 seconds from the rest of you. I'm sorry it's so short. Just as a sort of finishing up thought. And Alex, let me start with you, because another question came through saying, is the levelling up a positive or a negative thing for the City of London? What are your thoughts on that, Alex?
Well, I think that as Catherine and others have made out, this sort of common purpose, common agenda with other major UK cities is one that London should continue to embrace. I think, interestingly, whilst the government has its rhetoric, the reality is, and some of this is sort of me, out of my comfort zone of being a pessimist, but some of the evidence suggests that London is, will do reasonably well, if not very well, going forward. Net immigration into the EU is the second highest level since 1965 in the year to the end of January 2020, 50% increase on 2016 levels in non-EU immigration. Most of that will come to London. The other point being that in terms of the comprehensive spending review, London actually didn't do too badly on that front. So I think, we've got the problem of TfL's financial settlement, which is actually arguably more about some of the personalities who ended up in Downing Street versus those in City Hall. If we can get over that, where most other cities are sympathetic to Britain being given a sensible, lasting financial settlement for its transport system, I think the signs are reasonably positive. So, but we have to grit our teeth a bit, I think. Okay,
David. I mean, I imagine going forward, you'll be wearing the TNFD hat, of course, and much of your time will be spent on the climate and the nature issues. Are you generally cautiously optimistic, would you say, about where it's going?
I'm really optimistic.
Okay.
Just on the levelling up, I want to tackle that. We shouldn't forget the importance of a strong financial services sector to help levelling up. The truth is that financial professional services aren't just based in London, they're all over the country. They're in Leeds, they're in Belfast, they're in Bristol. And having a fair, transparent and available financial system that includes people into the financial system is something that we really need to look at. And the Khalifa Review was very clear on this. And we look at countries like India and other parts of the world, they've done a tremendous job and there's lots for us to learn. So I just wanted to, the levelling up agenda always seems to be London versus the others. Let's think about financial services and professional services and the role it can play in distributing wealth and access to financial services across the country. I'll park that. On climate sustainability and nature, I'm incredibly optimistic. I'm truly excited. I meet companies every single day in this country innovating in new ways of food production, agriculture, bringing fintech and food production, nature and conservatory together. There's a tremendous entrepreneurial ecosystem being built up. And these are the companies of the future that we're going to have to invest in to solve the climate and nature issue. So I'm very, very optimistic that the UK plays a leading role for the world on this.
Okay, very good. And Janine, to finish up with, I mentioned topping the list, London for entrepreneurs to succeed in. This was the Forbes 30 under 30 data. But we were not top on cities to work in and live in. I think it was 14% UK, 41% in New York or something like that. How do we get that number up?
I think keep doing what we're doing in one way, because I think ultimately we're in a great position. And arguably, I would say I've lived in New York many years. I was from there originally, and I'm going to say London is the place to be. So London has been my home for more than a decade, and I would choose here anytime. But I would say I really believe the UK is the best place to start a business, to build a business, and to scale a business. So I think we just need to continue to push forward and not rest on our laurels, continue that momentum, and also talk more positively about the ecosystem here as well. I think it's very important that we do that.
I would love to revisit all of these things, you know, when the next report comes out, and really see how far we've come. I think it's important we revisit all of this stuff. So hopefully we can all meet again to do that. Look, I want to thank everyone. It's been a really super discussion, fascinating discussion for me as a Londoner, born and bred Londoner, but also as someone who's lived many years in New York. Thank you very much to Catherine, to Janine, to Alex, and to David. And Catherine, I'm going to hand it back to you.
Great, thank you very much, Axel, and thank you for facilitating that really fascinating exchange. So look, thank you all of you for joining us. You're very shortly going to be getting a link to the report, and I do encourage you to share it throughout your networks. I really think now is a vital moment for us to ensure that the UK remains a preferred destination for financial and professional services. This report not only demonstrates the continued strength of our global offer, but as we've been discussing, identifies areas where we need to work and lessons that we can take from other financial centres around the world. So I hope that this is a useful tool for people. It is a piece of analysis, and in response to the question around building relationships with other parts of the world, yes, I agree with Janine. We need also to be talking about our strengths and promoting them around the world and looking at where we can build those new connections. So we look forward to working with all of you to ensure that the UK remains fit for current and future challenges. Thank you very much to everybody, and let's just echo Janine again that London and the UK is the place to be. Thanks very much, all of you.
Thank you.